This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Blockworks Digital Asset Summit, which is crypto's premier institutional event, is back in London October 13th to 15th. It'll have speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers. Think BlackRock, Circle, Coinbase, the UK Parliament, Jito and Marinade, all under one roof. Notable names include Joe Lubin from Consensus, Hadley Stern from Marinade, Rebecca Reddick from Jito Labs, a whole bunch of Blockworks folks, and more to come. There's a VIP dinner October 13th, open to speakers and VIP ticket holders only. That will sell out, so act fast. And it's all going down at Old Billingsgate, London. Use the code LIGHT100 for £100 off at checkout. We'll see you there. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Brandon Potts, partner at Framework Ventures, friend of the Lightspeed pod. I believe it's your second time on. Brandon, thanks for joining me on the show today.
Of course. Nice to be back and great to see you again, Jack.
It's good to see you as well. We're kind of bi-coastal today. As you can tell, you have that nice San Francisco Bay view behind you, which is quite nice. My view's not quite as good here in New York, but maybe one day if Blockworks keeps ascending.
Come out here and hang. Our summer just began after what I believe was like the coldest summer in 50 years. So happy to have you anytime. Yep.
Felt like the hottest one in 50 years in New York. It was truly awful. But I won't bore listeners with more commentary on that. Brandon, give us just a sense. I mean, it's been a while since you've been on the show. This is the first time I've hosted you on Lightspeed. So just give me a sense of what you work on at Framework, crypto venture fund. A lot of listeners may be familiar with, but what is your work specifically over there?
Yeah, well, I'm a partner here and have been on the team for, I guess, 4.5 years now or so. Framework, we began basically going all in on DeFi, and we hit, fortunately, a lot of the early ETH primitives as it relates to, Chainlink, synthetics, Aave, Yearn, the graph, you name it. But of course, over time, as crypto has matured and as the stack has expanded and frankly, a whole, new source of talent has come in, we've obviously expanded the aperture, but, we're currently operating out of our fourth fund. We like to be lead or co-lead investors, predominantly in seed and in Series A stages. And thematically, we're looking generally for folks in and around DeFi, infrastructure, generally AI, energy, stablecoins as some new, green shoots as well. But also, and I'm sure we'll get into it, just folks who are taking on net new markets are going out and sort of leveraging crypto or on-chain capital in just new ways. And so, yeah, that's us in a nutshell. And I guess, personally have a background in mostly engineering and in products. Fortunate to be early to Ethereum. And once I joined Framework, became the Solana guy, helped lead our investments into teams like Jito and DFlow and a number of others. So yeah, basically we're all full stack investors here and we're just looking for the best founders to back.
Okay, cool. And you mentioned you're the Solana guy at Framework, hence the Lightspeed pod placement here. What do you find yourself interested on the Solana side these days? Like what kinds of deals are you looking into personally or even just seeing a lot of being pitched to you?
I'll be candid with you. I think the venture stuff on Solana has slowed down a bit as folks kind of disperse across any number of, call it, layer ones or just different architectures or business models. Generally, the market structure in crypto has changed materially. But to answer your question, I think the thing that is the most exciting about Solana right now, and I'm sure you sense this, Jack, is there's kind of this dearth of narrative. And it does seem like we are somewhat in this doldrum or kind of, valley of just, I wouldn't call it valley of death, but in any case, kind of like this slow period of time. But behind the scenes, I'm excited to be seeing just all sorts of infrastructure improvements, whether it be from protocol teams, the application layer, or just from Onza themselves. They've really kicked into gear and I've been impressed with, frankly, just their velocity, sort of their communications, and just broadly their coordination across the ecosystem writ large. Of course, the teams or the protocols themselves are also kicking down and really, I think, just extending the rails for Solana to capture a lot of, I guess, real estate or value moving forward. And I don't think that that's fully appreciated right now. I mean, we'll get into it, I'm sure, but we have a number of Solana DATs coming to market. The ETFs have really yet to launch materially. And so, I think the writing's on the wall that Solana writ large is going to see a reinvigoration. And then the question in my mind is who stands to benefit the most from that? So, the first order effects I think are pretty clear, but really what I'm looking for is what are the second order effects? And then on the real kind of long tail, kind of high risk on venture stuff, who's coming in and leveraging Solana for something frankly differentiated or just something that hasn't been done before?
I would agree with you. I've seen just a general vibe change around Solana. In my work life, I am the Solana guy at Blockworks as well, I guess you could say, but I've transitioned away from writing the newsletter into working more on investigations. And that has nothing to do with Solana or that Blockworks is deprioritizing the network, but people now and again will be like, oh yeah, Solana's not hot anymore. You want to, escape covering that ecosystem. And it's just been an interesting kind of trend to observe. I would think that price action has something to do with it. Although Sol is actually doing pretty well. Like Sol BTC is up, I think, on 3-month time horizon. Sol ETH is down, notably, but still, like Solana is not doing poorly price wise. But for whatever reason, it's perceived as maybe not being as excited or hyped as it was, a year ago. So I'm just curious if you have broader thoughts on where that narrative is coming from for Solana and maybe what sort of narrative you see driving a potential, reintroduction of excitement into the Solana world.
Sure. Well, yeah, to your point, I also have found it interesting as of late that generally sentiment seems to be somewhat muddied, if not skewing bearish in terms of just personal anecdotes and folks that I'm interacting with who are building behind the scenes or, developing new things. And yet, Bitcoin over 100K, ETH basically near all-time highs, Sol, to your point, not doing poorly, and a number of others that have, kind of come out of the grave, if you will. But I think to get into kind of the specifics of what I see upcoming for Solana, look, it's DATs and ETFs. It's frankly a function of integrating or incorporating crypto assets with legacy assets. There's, any number of ways to cut that and kind of discuss where the yield is coming from, where the capital is coming from, what the structure is. But look, to put it plainly, Ethereum essentially doubled its market cap and increased by 300 bill by way of raising to date 15 bill roughly in Ethereum DATs. And I think there's roughly 30 bill, so double that, in Ethereum ETFs. So 45 bill in visible demand for Ethereum has essentially doubled its market cap and produced 300 bill in net new market value. And so when I look at what's happening in Solana, and this has been reported on publicly, and I'm sure there will be more, Sol DATs are, currently, I think, around 2.5 bill in cash raised. And ETFs have really yet to launch in a material fashion. But let's just kind of, do some back of the napkin math. If Sol DATs raise 2.5 bill, come out of the gate with some momentum, monetize premium, and kind of smash the first ATM, let's say they get 5 bill. And let's say the ETFs, raise double that, 15 bill at sort of that same 6 to 7 multiple in value creation that Ethereum experienced. That's, ballpark 100 billion in market cap value that could be created over the coming months. I mean, this stuff is happening in real time. And I think folks are going to be surprised to the extent, frankly, they're just going to be surprised at the velocity. And the other thing I would add is, it took Saylor, kind of the OG of all of this, many years to acquire the stack of Bitcoin that he has to date. But then you have folks like Tom Lee and, of course, the folks at SharpLink. They've essentially acquired the same, supply in a function of a month and a half. So who's to say that that dynamic won't continue? Obviously, there's a number of nuances and there are, many factors that I'm watching play out. I think first and foremost, macro rates. I think the next FOMC is like September 16th. So, we'll see. That's been highly politicized. Everyone has an opinion. Maybe they do, a small sort of cut just to kind of like assuage the political situation, if you will. But nonetheless, that'll produce more risk on appetite. And if you time things around sort of that sort of a catalyst, which make no mistake, the SOL DATs and ETFs are kind of roughly lining up around that same time, that could be very compelling and interesting from sort of a momentum standpoint. But yeah, I think like, look, it doesn't take much to sort of shift narrative. When I look at Tom Lee and, Godspeed, love him. He's doing the best work. He's doing great work. But, he basically comes in and says Ethereum is stablecoins and future looking, it'll be where AI takes place. And so, when I look to Solana and try and understand what is that like very distilled, synthesized, simple soundbite, I think that's a very nuanced conversation in its own right, because I think a lot of Solana bears have kind of pointed to it's retail, it's meme coin, it's kind of casino chain, and Wall Street would never want to interact with that. I think to counter that argument, when I go back to early Ethereum days, it was the same sort of behavior in and around ICOs and NFTs. And so I don't put a whole lot of weight and faith behind that. I would also note that these institutions, when you talk about mercenary capital, they've tried to cram sort of their worldview and their demands into every possible configuration you could think of. First and foremost, they tried to roll their own private chains, which aren't blockchains. It's basically another client on their own server, so to say. They've tried to cram everything into Bitcoin. Obviously, the zeitgeist now is we're going to put everything into Ethereum, whether it's on the L1 or the L2. But I think what I'm trying to get at is that's just generally where people are at mentally as it relates to understanding crypto and blockchains. And so I think it's just too early to have a firm verdict on Solana or any of these other newer chains coming out. And so, I'm sure that the heads of these DATs are going to have, sort of their pitch lined up. I think some of the interesting things to mention, and again, it's very nuanced, is you look at some of the staking yields in Ethereum and you have sort of folks like Bitminer basically booking that as ARR. And, you look at the inflation rate in Solana, it's double that. However, it's not essentially gap revenue because a lot of it is due to inflationary schedules and emissions. So I think there's kind of a lot of nuance in and around there. But all that to say the design space is wide. And the other thing I would point out, or at least expect or challenge some of these newer DATs coming to market to do, is to date, I've been disappointed to see basically folks kind of rolling their own LSTs. I'm biased. I'm an early investor in Jito, of course, but I think anyone who isn't leveraging Jito SOL is synthetically short on-chain activity Solana. And what I mean by that is if you're rolling your own LST, you're obviously trying to capture a larger sort of spread and kind of capture more emissions, but emissions will taper off. And what you really want to do is get long all natural organic fees. And not only that, MEV activity. So if you're actually bullish on Solana and you want to position yourself in the most bullish kind of value accretive, SOL per share being sort of the marching orders, I think, it would behoove these newer ones coming to market to frankly use things like Jito SOL, where there's liquidity, the custodians are using it, there's all sorts of on-chain capital already denominated in it. And frankly, it positions you for longer term upside. And so I'll pause there, Jack, but long and short, I think there's all sorts of things to be excited by. Happy to get into maybe some of the lowlights for Solana as well. But yeah, I'll pause there for a moment.
Yeah, a lot packed into that answer there. I kind of want to start on just this last bit. where you said that creating your own LST makes you synthetically short on-chain activity or something like this. Like that, is that necessarily true? Because I feel like, some of these other LSTs also get like capture fees from MEV and priority fees and so forth. So it's not necessarily like Jito Sol is the only way to accomplish that.
No, it's not the only. However, I've been surprised to hear some of the talking points of the early Sol DATs, or at least the ones in market today, kind of rolling their own Sanctum LST. And of course, they're doing it from maybe a compliance or an auditability sort of perspective. But frankly, they just don't want to lose any kind of the emissions that they're capturing. And so I understand, and I'm not saying this is like a silver bullet, but when you look out longer term, you want to be long on-chain activity. And I think the best way to do so and the best way to capture yield for your shareholders is to do so in the asset that frankly has distribution on-chain and is integrated all across Solana DeFi. And not only that, on the institutional side, it has all the custodial support, basically all the compliance stuff already in place, and gives you the upside to, frankly, just more MEV capture. So it's not a silver bullet, but I was just thinking about this morning, and I was kind of wondering, like, why is it that, folks are doing what they're doing? And again, I understand, but when you kind of like take this to its logical limit, it's unclear to me that rolling your own kind of LST that has basically no liquidity and you're just capturing emissions is sustainable in the long haul.
Interesting. Yeah, I mean, I would guess if you look at like the DFDV, I think they have a LST on Sanctum. There's sort of a branding component there for it that's probably attractive to the DAT. So it's like, if I'm DeFi Dev Corp, I want DFDV to be everywhere. I want myself to be seen as like part of the quote unquote Solana ecosystem. And there's, I think that's kind of the attractive, interesting thing about the Sanctum LSTs to like a validator or a DAT that runs a validator like they do.
Yeah, no, 100%. And make no mistake, branding is very key and central and integral, especially in these early formulation stages when you're trying to get out of the gate, establish yourselves, get some real size and get sort of the game off the ground. But basically what I'm saying is, I think I'm more bullish on Solana than most folks for any number of reasons. And if you're bullish, then the second order effect of that is on-chain activity picks up. If on-chain activity picks up, does your LST yield really suffice? Or is there a better alternative? Especially if you want to go out longer on the risk curve or get a blended yield to pass back a higher, composite yield to your shareholders. So it's anyone's guess as to how things play out. But again, that's my view.
I don't really have data in front of me, so I won't belabor this point too much. But it's an interesting one to note just because just the last episode we did was with Fragmetric, which is a restaking protocol. And they were saying that what DFDV is doing with them is they're taking DFDV and then restaking it in Fragmetric. And so you capture the staking yield and then add a couple percentage points on top of that potentially. But it's interesting that you're saying that
totally.
Jito Sol would present higher yield than what DFDV would pull off by having its own LST.
And there's nuance there. And I'm not saying, again, this is the only way, but let me ask you this. When you do restaking on Solana, you're leveraging most likely whom?
Jito Sol. Well,
Or BAM.
Under the hood how Fragmetric works. But
no, look, this is all forward looking. We're just having fun, Jack. But yeah, these are some of the thoughts I've been noodling on as of late.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. Thank you to Eigenlayer for making this episode possible. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. ETH, SOL, and other proof-of-stake digital assets offer a unique solution. Exposure to the asset's performance, along with access to long-term, sustainable staking rewards that are uncorrelated to traditional interest rates. Using institutional-grade liquid staking tokens unlocks access to capital efficiency for advanced management strategies, while restaking provides the opportunity to participate in the core infrastructure powering the verifiable cloud. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk-managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Thanks again to Eigenlayer for sponsoring this episode. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. And I do think, as a broader point, the on-chain activity thing is interesting because kind of what annoys me a bit about the DAT mania is that none of that really matters. Like, it's kind of who can go on CNBC and bullshit the most effectively, it feels like. And so like a clip came out of, I forget his name, but the BlackRock exec who went to SharpLink. This clip came out of him saying that, there's a correlation between the amount of assets secured by Ethereum and the price of ETH. And I don't necessarily think there's like a super intellectually defensible reason for that to be true. Ethereum fans would disagree with me, but it's like, I don't even know if he really thinks that. And I don't know if it matters. It's just like, who can tell the most compelling story? And so that's where it gets a little tiresome. And, Solana still has actually pretty robust, on-chain activity. Like we talk about the meme coin trend like it's dying, but meme coins today, I was looking at the data earlier this week, and September 2024 was a pretty down month for meme coins on Solana. It obviously picked up through the election. So like there's more meme coins happening today than there were a year ago, which is maybe against the narrative you would believe. And so there is stuff happening on chain on Solana still. I just think that in the DAT world, that doesn't matter. It's like you can just go on a podcast and say things. And so like ultimately it's like, can you make people think there's some plausible link between Ethereum and AI, and then they'll buy it? And so I'm just kind of interested in like, how do you make the on-chain narrative actually matter, or like these on-chain metrics actually appeal to investors as opposed to just telling an interesting story to them?
Yeah. Look, I mean, you can just go out there and do things, Jack, to your point. And I think that's what Wall Street, I mean, look, this is kind of their bread and butter. They're storytellers, they're salesmen, and they're basically kind of just trying to get capital flowing around into their own bag, so to speak. I mean, that's kind of what everyone's doing at the end of the day. But I think to your point, the on-chain stuff hasn't really become material to the current narrative or story, but it will. And I think a large part of why Tom Lee to be specific, chose stablecoins is, look, that's a very simple, easy KPI that you can point to in a super high fidelity fashion on chain every single day. And look, I mean, that's what a beautiful metric to point out in terms of growth. I think we're all keenly aware of stablecoin supply being roughly 270 bill, 280 bill today. And, if the Treasury and Scott Besson are saying 4 trillion, I'll take the over on that. And so, he just chose a really excellent metric to sort of base his positioning around. And I think that's the open question in my mind for some of these Solana DAT players coming out is like, what is that? And like, the thing about it is, ideally, if Solana is maybe going for more retail or maybe more consumer orientation, you would ideally want to point to users or, monthly active users, daily active users. But the tough part about that, as you know, is in crypto, what is the super high fidelity key metric that you can sort of show to attest to that? I mean, everything's gamified in terms of, number of wallet transactions or unique wallet holders or you name it. And so maybe someone has a clearer understanding or an idea there. I'd be keen to understand sort of how we could accomplish that. But, high level, I just sort of start to think about Ethereum is going after kind of this AUM liquidity security game. So what is open? I think for Solana, you want to just generally go for user growth, eyeballs, attention. And I think there's already sort of the raw ingredients there in terms of, look, to your point, meme coins, everyone has a position on it. I don't really, it doesn't matter. It's a thing and people like it and it's going to continue. It's anyone's guess as to what the order of magnitude is in terms of meme coin activity, a year from now or 2 years or 10 years from now. But the fact is it's an early harbinger of people interacting and frankly doing things on Solana. And the other thing I would add is once people get on chain or just to a product that they like, it's very sticky. Do you really think that, if there was a pump fund instantiation on like an ETH2 or whatever, people would like all just magically bridge over there? I mean, maybe the crypto natives and maybe some initial people, but look, I mean, they have a sort of pre-installed, like captured user base, and those network effects are super powerful. And so I think that's why a large part of the narrative in Solana, rightfully so, is like, look, we need more applications. We need more applications. We need more shots on goal to get more users and kind of more consumer and eyeball and network effects. And I do generally agree with that. But the other thing I would add is consumer is kind of a loaded term. So what are we talking? Are we talking social media? Are we talking NFT stuff? Is it cultural? Is it this, that, or the other thing? For me personally, I just think of consumer as kind of a front end. And I think of blockchains as excellent value transfer systems, AKA financial services. And so I think, a really great place to kind of double down on or triple down on, or founders kind of looking where they should build is like, where is there an opportunity to extend a financial service from a Solana sort of DeFi primitive? And, we've seen many, I think, the tough thing about that to date has been Solana's like NASDAQ on chain, and we're going for sort of high speed, low latency, low cost. That would have been an ideal substrate for perps, but unfortunately perps landed elsewhere, right? On Hyperliquid. I've long held the view that stablecoin payments make a ton of sense in Solana. But, over the last, I guess, couple quarters, there's a whole plethora of kind of like stablecoin payment specific layer ones now coming to market with a lot of momentum and notable backers, including us, of course, with Plasma. But I think the thing that I would encourage folks to do is kind of just understand, look, if Ethereum's going for Wall Street, AUM, and kind of capital in this liquidity game, we need to get into more of the volume game. We don't maybe need hundreds of billions of stable coin liquidity. If we're able to do things for faster and cheaper, we can use a smaller capital base and compound economic activity at a much higher velocity than our competition. And so what are some of the elements that you look to get off the ground there? I mean, certainly folks are looking into stablecoin payments. There's a healthy ecosystem there. I think the other thing is just kind of deep in AI. I generally find that deep in AI founders are interested in launching on Solana for sort of these architectural reasons and frankly just cost. And a large part of that is they're explicitly focused on distribution because they are a bit more consumer oriented versus maybe being explicitly financial. And so I think that there's a large opportunity for, I wrote an article on this on Twitter, to shamelessly shill it, but essentially where I think we're at right now with just crypto writ large is who's coming in and extending the on-chain capital that we have at a either better distribution or better cost of capital to any number of distinct business lines or industries or use cases, who's getting really into the nitty gritty in terms of what are the tax implications? What are the regulatory considerations? How does this maybe replace some B2B SaaS product and sort of a fintech, platform all in one, click, so to say? And there's a massive, massive movement underway that's underappreciated, but I think is starting to get a bit more appreciation by way of people starting to grok stablecoins. And so it's been really impressive to see kind of the momentum shift. But with that, the design space is wide open. And now it's like, look, go out and understand sort of what your business is, what the problem is you're solving for your clients. And then how do you sort of take those raw ingredients or concepts, refactor that into a code base? Okay, now how do you instantiate that on chain? And where do the economics make sense on chain for you to do so? And I think as we get into more, like I said, consumer, maybe it's deep in, maybe it's AI, the verdict is sort of open still. But in those sort of use cases where scalability really matters, Solana can shine.
Yeah. Yeah. And of those things you mentioned, I just want to underscore as well perps. I think obviously Hyperliquid, very, very successful app. In some ways, directly competes with Solana in terms of going after the trader, more, I guess, retail user base. And I think that this is one that we're just going to see a lot of coming up. It feels to me a bit like, beginning of 2025 with DATs, where people were starting to look more closely at MicroStrategy and how to emulate that elsewhere. And I started to get some DMs from people saying, hey, I'm trying to start a Solana MicroStrategy. And it feels the same way with perps right now, where for one reason or another, Drift, which I think was the kind of chosen one for Solana perps, has not just captured nearly as much market share as Hyperliquid has. And I think a lot of folks are seeing that as just an opportunity, especially after Alpenglow goes live and Solana is much faster in theory. Folks are seeing that as kind of a space to a gap in the market to exploit, similarly to what we saw with DATs months ago. So I do think that is one that you can bet on seeing quite a few more shots on goal with. We'll see if anyone actually is able to unseat Hyperliquid, which is probably easier said than done. But that is one. I also, Brandon, did want to just ask you to maybe expand a bit on that. This article you put out called DeFi's Second Act, which I thought was an interesting read. It does really feel, I mean, if you just look at like the stablecoins chart or whatever, or like DeFi TVL, like it really is kind of, there was this big peak in 2021 and now there's a big peak again. And it does feel like we're in like a DeFi 2.0, if you will. And so, yeah, what's sort of the overview of how you see DeFi playing out in this kind of second version that we're living through right now?
Yeah, no, I think, you've touched on it a bit, but it does revolve largely around stablecoins and the fact that basically there's common knowledge now around how these things are beneficial to the United States by way of purchasing our treasury and basically undergirding the ability for the US to continue to issue debt. And so, once we kind of got through that hurdle, thanks in large part to the Trump admin, like it was kind of just open season. And now people are trying to understand like, okay, wow, these are actually distribution vehicles where we can acquire customers basically globally from day one. Of course, there's regulatory compliance, cyber, there's a number of considerations, but technologically speaking, you have that ability. That's something that's net new. Even with fintech providers, you kind of have to go either state by state or country by country, have a local banking partner. Stablecoins just put it all on chain and it's liquid. I mean, it's extremely powerful. And so that's one element to it. But I think the other thing too is just kind of changes the potential business models of a number of folks in and around payments or banking itself. I think it's notable to see that the banking lobbyists aren't exactly stoked to see that, there's pass back yield happening. That's kind of their whole business model. They're positioning this as a risk to the entire economy. And hey, only we should be allowed to underwrite kind of credit and loans. And I think that crypto's long held sort of the ethos or the view of like, hey, look, anyone can kind of do whatever they want. Obviously, there will be rules in place, but why can't I earn basically the risk-free rate on my cash without having to put it into a money market fund or sort of lock it up somewhere? I think that's why the community banks are, again, not excited by what's happening with under the Genius Act. You're not really allowed to put pass back yield directly on it. But then you look at what Circle and USDC are sort of doing with Coinbase. It's not really a reward. There's kind of this loophole. So of course they're trying to close that. But yeah, I think, I guess I'm meandering a bit, but to answer your question more concretely, all of that has laid the groundwork for, like I said, founders they can come to the table now and literally just use crypto as a financing tool. It doesn't need to be this super intense, in-depth, like layer one where you're getting validators, RPCs, indexers, you need a block explorer, you need $100 million. You don't need to do that. You simply can come on chain and just say, look, I'm just going to service with either better distribution, lower OpEx, perhaps by way of not having to use legacy software and basically take on this timing risk and not earn any yield. Basically, stablecoins are just collapsing both legacy banking core software, but then also legacy financing. That, make no mistake about it, legacy banks, they're not really willing to go too far out on the risk tail, and they're not really willing to work with kind of the mom and pops or the small folks. They're really only interested in one thing only. Wall Street is always interested in what, Jack? Just size, right? And so if you're not like doing a billion plus or a 500 mil, good luck, even getting a call with these people, but let alone, getting into business at a rate that isn't punitive. Well, here comes crypto and on-chain stables with essentially, like I said, 270 bill in liquidity that's all seeking yield. And we haven't really seen the yield kind of wars play out. And I think there's a whole design space to be explored there as stables go from, like I said, 270 to 4 to 5 to 6. What happens when they get to 10 trillion? Imagine the amount of sort of activity, business activity, economic activity that will be able to be underwritten by way of having $10 trillion in stablecoins on chain. I mean, that's really powerful to think about. And yeah, no wonder the banks are somewhat concerned by this. They're kind of losing their reins a little bit. But, we'll figure out how to refactor or integrate legacy systems with these modern systems. Some folks will be late to adopt. They'll go out of business. That's okay. Others will be early to adopt and become much larger. And there'll be new entrants. I mean, this is just capitalism 101. So yeah, that's the long and short of it. But I think as it relates to founders perhaps listening to this, all that to say, you don't have to come in necessarily and be like this super crypto native person anymore. You can come in and just say, look, I just want to tap either liquidity or distribution or what have you from this on-chain component or primitive and build a whole entire business model around it, going after something that's real, that's in the meat space. So I think that's super powerful. And I'm excited to meet more and more founders coming to the table, and we're seeing them thinking along these lines.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. Thank you to Eigenlayer for making this episode possible. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. ETH, SOL, and other proof-of-stake digital assets offer a unique solution: exposure to the asset's performance, along with access to long-term, sustainable staking rewards that are uncorrelated to traditional interest rates. Using institutional-grade liquid staking tokens unlocks access to capital efficiency for advanced management strategies, while restaking provides the opportunity to participate in the core infrastructure powering the verifiable cloud. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk-managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Thanks again to Eigenlayer for sponsoring this episode. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. So let me play devil's advocate a little bit, which is that sort of your thesis, if I'm understanding it correctly, is that, okay, there's real use case, real yield, I guess, to be created through what's enabled by stablecoins. There's also now regulatory clarity, and so this is going to just greatly increase the size of the on-chain economy. But where are the signs, I guess, of this really happening? Because if I wanted to push back, I guess I would say that sure, Wall Street is getting into crypto right now, but DATs are not DATs are not really anything real, in my opinion. Like, and people would disagree with me there, but this like DATs are not this kind of image of a frictionless global financial system. Really, they're closer to a trade where bankers have realized that a lot of retail investors will pay $2 for $1 of crypto, and so they're going to keep making that trade while it keeps working. And I think, a lot of DATs, like, I think it's fair to say a majority of them are crap. Some of them will probably survive, but a lot of them are just, hey, my protocol foundation has a bunch of whatever token, and we're going to give it to you to create a DAT, or help kind of give you some kind of discount to create a DAT. And so, like, we have not necessarily yet seen what this looks like for these real productive businesses where stablecoins and payments are moving around the world, or people are creating new forms of online capital formation at scale. So I don't know, engage with some of that kind of pushback.
Sure. Well, for starters, I'll take the other side of your comment on DATs. I think they're real, but we've kind of covered that already. I think in terms of the bigger picture, and this is the fun bit, how is sort of this on-chain capital or stables or whatever contributed to real capital formation and underwritten real business value? I mean, you could argue that's all we've been doing to date, with a bunch of volatility and a bunch of kind of random stuff in between. But make no mistake, Jack, I mean, you look at Bitcoin, it essentially bootstrapped itself by way of becoming the world's largest distributed compute cluster into becoming pristine collateral. I mean, Bitcoin is legitimately real bona fide collateral now. And the question I think anyone's asking themselves is, does this get to parity with gold? And so I think, frankly, Bitcoin is at escape velocity. Ethereum obviously comes in, kind of establishes a situation where you can do sort of similar things to Bitcoin, but it's not store of value. It's programmable logic, right? And of course, that lays the bedrock for stablecoins to come in. And what stablecoins really did was make all of this stuff liquid and provide essentially a single function call to sort of transmit value, to capture value, to enshrine yield, to do any number of things. And so what I'm basically saying is these things have kind of self-funded themselves. And I mean, even when you go to look at AI, everyone's talking about AI. Bitcoin, by way of running proof of work, was an early bootstrapper to NVIDIA, right? Everyone was buying their early video gaming sort of GPUs to mine Bitcoin. And even Jensen himself attributes a lot of their kind of earlier years or kind of getting through that, eye of the storm, if you will, into his real thesis, which is now playing out. It was attributable to, frankly, crypto mining. So I would argue that's a very real capital formation story. I think the other element too, which I've already indicated a bit, is just these instruments, stablecoins specifically, are becoming larger and larger purchasers of US debt. And it's the number one issue, I think, across the board for most, politicians or Americans, is just the value of the dollar and kind of how do we maintain, world dominance or world reserve status or what have you. Well, look, you need demand on sort of the treasury bills that you're going to be issuing. And stablecoins provide just a very resilient, non-politicized, distributed manner to do so, versus just calling up your friends and allies and being like, hey, we need to kind of maintain this peg or this ratio. We need you to buy 5 to 10 billion of this stuff, and we're minting it next week. And so I'm greatly simplifying things, but this is just, broad strokes. But look, I think a lot of what we're seeing now is folks coming in and frankly, just extending those primitive rails much further into one application or one vertical. And I mean, the options are rather endless. A lot of what we've been excited by to date have been things in and around energy, things in and around AI. I mean, AI is such a large category. So what could that possibly mean? It's predominantly data, it's predominantly compute, it's predominantly financing. Perhaps like data center financing itself, not actually the hardware acquisition costs. Um, in addition to that, it's just things that folks are coming to the table just now and starting. And the reason they're only starting now is because they have the social acceptance to go out and start a crypto or stablecoin something business. Whereas just 6 months ago or last year, it was borderline illegal. Was it worth it to take the career risk and take on sort of this stigma? No, it's probably just easier to go into AI. It's hotter, it has momentum, it has a clean narrative. But look, these founders are looking over the fence now and realizing that AI is not going to be just this home run, silver bullet, easy play. And rather, the cost of capital in crypto may be cheaper, especially when you tap on chain rails. It's just a question of finding the right founder at the right time with the right idea and appropriate distribution. And that's really kind of what we're looking for.
Yes. And I think that a lot of this stuff is already happening. Like especially with stablecoins, I'm pretty convinced that that's like real. Like you can see pictures of Latin American supermarkets where everything is priced in Tether because people just, want to convert their paycheck into dollars to escape inflation. And like that stuff is absolutely real and it's happening. And I think there is maybe this effect where everyone in crypto and, a lot of listeners to this podcast probably are pretty like, dopamine addled where you start seeing these calls on Twitter of like, here's Ethereum's path to $42,000. And I think the Bitcoin magazine guy once said, crypto's real PMF is 100x's. Like that's what crypto's really good at. And so I think there's this issue where when you're in this kind of period of mania, it's hard to pay attention to much else because it has always been a pretty speculative space and people are really interested in the things that make the coins go up a lot. And I think that there can be a world where a lot of this on-chain stuff is actually happening. And like Helium is in year 3 of the nationwide phone plan, or year 2, however long it's been. And like there are real crypto things happening that people have talked about for a long time, but it just maybe doesn't get as much focus because when the big shiny thing is these DATs and the insane price appreciation we've seen with some of them, it's hard to pay attention to energy and RWAs and payments and these more boring, tame kind of ways that crypto seeps into everyday life.
No, totally. But I think that bifurcation in terms of, personality or archetype is present in all markets, right? And so you have kind of the short-term mentality, momentum traders is kind of what I refer to them as. But in the crypto native world, maybe these are the airdrop farmers, the point stackers, the mercenary capital. Like, look, I think, that game is up. It's been up. I've talked about this a number of times. It's not like who's playing that game and generating like a massively outsized outcome? Nobody. So the name of the game is real business, real value. And sure, there's some element of narrative and memetics and momentum there. But look, people are just, I think, generally more sophisticated. The number of options they have to invest their time and energy and capital into nowadays has generally expanded quite a bit. And I think, as a result of that, people just need to be coming to the table and playing a more sophisticated, comprehensive game and, just buttoning up a bit. So, yeah, the folks playing the old games, good luck. I think the data point I would put to that is what has crypto Twitter gotten right this cycle? Like, are we even calling this a cycle anymore? Right? Like, I can't really point
Not
to
a thing, Brandon.
I can't point to anything. Yeah. So, look, if you're getting all of your information from CT, I would just encourage you to expand your horizons a bit.
I think the real black pill on CT for me was the Circle IPO when Circle's S1 came out and everyone was like, "Oh my God, they're giving this much revenue to Coinbase. Like it's a terrible business. Why would anyone invest in Circle?" And then that IPO just went gangbusters. And I realized that the circle of the internet I'm in, no pun intended, is not very attuned to getting things right investment wise. So it is fun to debate on CT, but I would not get your financial advice there at the very least.
I would agree.
Yep. One thing I wanted to ask about, Brandon, that we didn't get into on Solana specifically is one thing that the Solana world is kind of into is critiquing the chain and seeing how it can become better. This is a pretty key part of, I think, Solana's collective identity. You saw it with Alpenglow. These researchers kind of criticized Solana in a paper, and then the Anza brings them in to rewrite Solana's consensus protocol. So, and to also caveat this, I think we're in a period of time where we're back to the like Solana goes down a lot period in like, arguments online. That's like resurfaced on the timeline, and I don't know how long it's been since Solana's had downtime, but it's just kind of a played out argument at this point. Whatever you think about it is what you're going to continue to think about it. So I want to ask you, like, where do you think Solana needs to improve, or what does Solana need to do better to sort of compete and keep pace in this DeFi 2.0 that you're speaking about?
Yeah. Look, I already think I touched on it a bit. I've frankly been impressed with Anza and just kind of how they've shifted things around, or just maybe started communicating more clearly or moving a bit faster. And so I think that's generally a positive for the ecosystem writ large. And, I've always kind of stressed the importance of dev tooling. And I think especially in Solana being predominantly Rust denominated, I think there's a bit more that could happen there as it relates to onboarding of more people and making it a bit easier. Maybe there's a story there around, LLMs being more integral or more helpful. We'll see. But look, I frankly do think we're at a point where, to your point, Jack, it's a lot of kind of perception. I think perception is the thing to focus on right now. And maybe that's unpopular to say because, to your point, people, especially technically minded like us, think, oh, that's kind of fugazi or that's like made up or what have you. But look, make no mistake, when you zoom out and look at the world writ large, perception is key. And I think, why I'm excited right now is the DATs are coming out, the ETFs, like there are going to be a number of folks out there kind of spreading the gospel of Solana, if you will, to dispel perhaps previous narratives or establish net new ones. And so I think, frankly, it's just getting someone into the arena to start putting some, shots on goal, if you will, and start stacking up, frankly, more of a following, maybe some momentum. And so, yeah, I really do think there's a perception game. And look, what I mean by perception is you got to win the top of funnel of mindshare so that when these founders I'm alluding to say, look, I want to build something, maybe leveraging a stable coin or using on-chain rails for distribution or what have you, you want them to say, oh, I would like to learn more about Solana, or I'm familiar with Solana, or what have you. And Solana's done an excellent job of this over the years. I'd say right now, if there were a chart, it would be maybe at a local low or maybe an all-time low. Well, not an all-time low. Post-FTX was all-time. But I'd say we're probably at a local low in terms of perception and the number of founders kind of building on Solana. But look, it doesn't take much to change that. Perception can change overnight, like we've seen with Ethereum, for example. It really doesn't take much. So I think that's the main thing. But technology wise, I think they're doing a great job. Anza, Jito, DFlow, a number of others, Jupiter, like all these teams are shipping. Camino. There's Drift, to your point, has been refactoring a bunch and really trying to sharpen the spear and getting competitive on perps. And, there's a number of other folks that I'm not going to go down the list exhaustively, but suffice it to say, people are building, they're shipping, they're kind of, banding together again. And I think that sort of poises the ecosystem to bounce pretty substantially. And then the second order effect is, assume capital does flow in kind of the way that I foresee it. Who's going to capture most of that, or how is that going to be leveraged or multiplied and put to productive use? So I think that's kind of where my head is at versus like the starting point.
Totally. And I think there's another sort of open question for Solana and the Solana thesis, which is that, for a long time, people in Solana would say, okay, like if all financial services and apps are going to come on chain, they're going to need to have this global shared state. Like having this patchwork of layer twos like Ethereum does is not going to work for financial services. And like in the long run, this kind of monolithic chain thesis wins. But then over the summer, we've seen again and again as these large financial apps and services come on chain, a lot of them want to just build their own. And so Robinhood is building a layer 2, Circle's building an L1, Stripe is building an L1, Google, I guess, is building an L1, Google Cloud, which was kind of a funny LinkedIn announcement from Rich over there. But you're sort of seeing that a lot of folks don't necessarily buy this modular or this monolithic thesis. And I would think that it's because you just sort of there's an L1 premium where your token will be valued more highly if you're a layer 1 as opposed to a layer 2 or an app built on top of Solana. And so because these are capitalistic businesses, they will, do the thing that makes them the most money. So what's kind of your take on all these new alt L1s? And I mean, even just knowing that Framework invests in other layer 1s, you guys invested in Barachain, Plasma, as you mentioned. There's probably some others that are escaping me right now. But I guess, how does Solana relate to and compete in this world where, people are happy to launch their own L1s, even if it creates a more fragmented user experience?
Yeah, I think I would probably push back on the L1 premium. I think we've seen those premiums compress. And so I think it's less sort of from that vector that I would be concerned. But to your point on maybe the institutional or enterprise adoption, they do kind of want to roll their own substrate. And maybe going back to what we were saying on the LST stuff, like maybe it's a branding sort of consideration, maybe it's compliance, or they just need it in-house, or what have you, right? I mean, there's all sorts of different reasons as to why an enterprise would decide to go that route. But look, I'm not sure that that's like the end state. Like, is everything in Ethereum L2? It's possible. Or maybe they roll an EVM sort of compatible L1. I mean, sure, why not? But, I think what I would indicate is we haven't seen many of these. We have maybe half a dozen, like writ large. Is that a large enough data, sampling to say, look, hey, the next 6,000 things coming on chain from this perspective, they're all going the same way as these first 6. I think that's a mistake. And basically there's a whole design space and a ton of nuance in there. And it depends on the business model, depends on the personnel making these key decisions at these companies. And it kind of depends on perception. And so those are the main components to think through as it relates to, again, widening that top of funnel. Is I think you start with perception, you go and work your butt off on getting someone to launch on Solana. And from there, you just build a compounding base. So, all that's totally possible. I think that we would be remiss to just sit here and underwrite the future based on 5 or 6 data points. Of course, there's momentum and there's sort of kind of free real estate as it relates to narrative grabbing hold and spreading, and there's network effects in that. And so, I think it would have been nice to see some of these Solana DATs launch a bit earlier with more size, as we've seen these MNAVs kind of compressed to 1. But look, they're doing it and it's happening. And maybe it's happening around a time where rates drop, maybe Sailor and Strategy get included in S&P. I mean, there's a number of things that you could point to suggest that, DATs, ETFs, like kind of the narrative will flip and perception will improve. And by way of garnering that increased perception, you can attract maybe more enterprise folks to launch something that's maybe a bit more in tune with Solana's architecture and value prop and thesis, versus maybe the story on Ethereum, which is like, we just need liquidity and we just need stable supply, right? So yeah, I think we're just too early to frankly underwrite all of these things. And I'm excited to see just the momentum continue for our industry writ large.
And in fairness, I don't think that the Solana Foundation or just really anyone is talking that much about the monolithic versus modular chain debate these days. It's a little bit of a moot point that people are just not quite as interested in, especially when everything is going up like it is right now. It feels less zero sum. And I thought there were, like, just on this subject of DATs and Solana's involvement, I thought I saw something telling today which is, you talk to people about Tom Lee, like why is Tom Lee valuable to Ethereum? Well, it's because he can go on CNBC and tell a good story about what Ethereum is for. Today I saw Lily Liu, the president of the Solana Foundation, go on CNBC, and they like posted a clip of her talking about the total addressable market for Solana being 5.5 billion because Solana is for internet capital markets. And so anybody with an internet connection can participate in the Solana network. And I think that is really the narrative that Solana wants to push. And I just thought it was telling and interesting that now Lily Liu, who a lot of people I think wanted to be the Michael Saylor equivalent of Solana, like just from folks I talk to and ask who that person could be, you'll hear Lily's name a lot, and she's now going on CNBC. So maybe if she does, like even if she doesn't get involved in a DAT, she may start trying to adopt some of that Tom Lee, go on TV and tell investors a good story positioning. I don't know. I truly don't. I'm just speculating here. And I think that the story that she or the Solana Foundation or whoever would tell is that Solana is for internet capital markets, which, connects the kind of fragmented global financial base into like anyone with an internet connection can go and participate in the same shared ledger.
I mean, look, like I was saying, these things are all technologically feasible. And so it's not necessarily hand wavy, but it all boils down to execution. And I think that's what the market is underwriting is like, look, I just need data points to suggest that you're on this trajectory. And a large part of that is perception based. But I think when you zoom out, it makes sense if Bitcoin and like its terminal state is this store of value asset. I think gold's market caps, I mean, I know it's been ripping, so maybe it's like 27 trillion or so today. But yeah, let's say that's kind of the ceiling, if you will, for Bitcoin, perhaps in its current, status. Well, imagine you're doing, just services writ large. That's going to be a much larger business. And maybe Ethereum wins kind of this liquidity settlement, whatever we want to call it. I think, frankly, none of us can frankly underwrite that today. But obviously, that's going to be orders of magnitude larger than just store of value, actual utility usage. Are you kidding? Yeah, that's a much larger market. So I think it's just, everyone asks me like, what's your hot take this summer? I'm like, man, we're still so early. Like everyone is talking about, oh, we're in the 7th or 8th inning of DATs. It's going to nuke this cycle and we're cooked. It's like, what are you talking about? Like, sure, like things in crypto don't always pan out. Like this is the venture industry with a real-time ticker. Like, of course things are going to like not work out every time. That's just the nature of the business. But when you zoom out, you're like, look, it's still compounding upon itself and growing in a bit more of a linear path, over a long enough time duration. But again, when you listen to crypto Twitter, their time duration is like 60 seconds. So no one really picks up on this. But yeah, like, look, I'll leave it at this. We're optimistic. I'm excited for a number of sort of catalysts upcoming for Solana. And, if you're a founder kind of loosely toying around with these ideas or you have something in prod or, no matter where you are, I'd love to chat with you.
Brandon Potts, Framework Ventures. It's been a very fun conversation. Thanks for joining me, man.
Of course. Nice to see you, Jack. Thanks for having me.
Thank you, everyone. If you made it through this episode, we would love if you gave this episode a thumbs up or a 5-star wherever you get your podcasts. Give us a follow on Twitter, YouTube, all that good stuff. If you enjoyed this episode, please share it with a friend, and we will see you all again very soon.